Now let's get another check on Amazon. Those shares are down about 4% after reporting weaker than expected revenue for the second quarter. Joining us now is Scott Devitt from Wedbush. Scott, they did face $1 billion currency headwind on the top line here. I don't know how much of that was factored in from the beginning. And AWS, a little better than expected. So what do you think of this reaction? Good quarter, mediocre quarter?
Yeah, hi, John. I'd say mixed. So the headline revenue number isn't really where investors focus because so much of that, almost 110 billion of the 150 billion is just retail, and that's impacted by 1P and 3P mix that get booked differently. But where the focus tends to shift to quickly is operating income, where they did beat with a 9.9% margin versus consensus at 9.2. As you mentioned, AWS at 19%. That's the fastest growth rate for AWS going back to when the business started to slow a couple of years ago. But the nit is the advertising revenue. That came in at 19.5%. Consensus was 22. So Meta advertising grew faster, and that was a pretty good deceleration from the last quarter. So we'd like to learn more about that. I think to me, that's the one thing that stands out as the negative, but the AWS is quite good.
Now, Scott, if that's the thing, if advertising revenue is the thing, has that become so important that if you believed in Amazon's story a few hours ago that you question it now? Is this potentially a buying opportunity if the stock trades here tomorrow? Or no, this is an important growth area?
It's an important growth area. I think you want to know, have a better understanding of what caused the deceleration. This is a $60 billion kind of revenue line that investors anticipate is going to grow significantly over time. So you want to be certain that they can keep an elevated growth rate for a long period of time. And personally, when you look at the entire report, I think a pullback is a buying opportunity. I think the strength in AWS overwhelms the advertising. But if I'm being transparent about it, the advertising that's not a good number relative to expectations.
So it sounds like probably a lot of questions about that on the call. So you got shares down 4%. I mean, up more than 20% year to date. Expectations were pretty high going into this report. Even if you look at the consensus numbers for revenue, for operating income, they were at the higher end of Amazon's own guidance, higher end of the range of Amazon's own guidance in terms of what Wall Street was expecting. So I guess just how high was the hurdle for the company to cross today to be able to see a positive reaction here in general?
Well, in hindsight, it was high, right? But AWS performed. So expectations for AWS were rising going into the print, and it exceeded expectations. The advertising number, if you go back to Alphabet, YouTube's dealing with something a little different in terms of video advertising inventory growth. But the core search business outperformed expectations by almost 200 basis points. And then Meta had a very strong quarter and a strong guide. So you would have expected going into this print on the ad line for Amazon, it would have been a good number, and it wasn't. So that's where the expectations miss, is really centered. Overall, operating profitability, very good. Revenue is what it is. I call that in-line-ish because you just don't know that mix shift dynamic that's happening in retail, and you want to focus more on the operating profit line more than anything. So it's a healthy number, but not perfect.
Okay, very quickly here. How much is CapEx spending on AI going to matter? How much do you expect them to talk about it in this call?
Quite a bit. So we were expecting 16. They did 17.6 billion. So just like everybody else, we're all kind of catching up to the real numbers, and so the CapEx was higher than expected. I think investors will look for more information on that. We'd expect them to spend somewhere in the ballpark of 65 billion this year, all in on CapEx across AI, AWS infrastructure, and the retail business.
Okay.